There are absolutely loads of buy-to-let investment companies out there. Companies that will train you to source properties, companies that will sell you leads, companies that will offer you armchair investments. Now, all these companies, as a rule, tend to be trading on the principle that they're offering you something where you can make a lot of money for very little effort. The short answer is that in this market, as we are in 2011, there really are no shortcuts to making money. So when companies are offering you deals that really seem fantastic and potentially too good to be true, you have to make sure that you really stress test these deals and do your due diligence on the companies. First of all, who are they? Have they actually got the experience to be sourcing the right deals for you and to know what kind of investment is going to be right for you? Are they investing in this market? There are a lot of companies out there run by people who haven't even bought anything in the last 5 years. So if they're making recommendations to you on really good deals that work in this market, have they invested in this market themselves? And if not, why not? Secondly, there are a load of companies that will offer you BMV deals. Now then, BMV stands for below market value. The question that you've got to ask is, what is that market value? And how do you know that that discount is actually valid? People will say, perhaps, I've got a 25% BMV deal you've got to take advantage of. Now, what they're trying to tell you is that the price that they're telling you can buy that property for is 25% less than the full market value. And they'll tell you that they've had it surveyed. What you need to ask them is if they'd be happy for you to get your own independent surveyor to carry out a valuation. If they're not, then run away from the deal. Some of these companies will also offer you some sort of rental guarantee. They'll tell you that once you've bought the property, it's going to rent out at X value for the next 2 years. You need to check out how they've established that rental value and whether it is in fact guaranteed. Have you got a contract with them that they're prepared to sign where they'll top up any rent if it doesn't achieve that value that they've told you it will? 9 times out of 10, the answer is no, and in the vast majority of cases, these rental guarantees aren't worth the paper they're written on. You need to check out the market for yourself, do your own research, see what kind of values these properties are going for in similar areas, and work out in your own mind whether you think that the prices that they're quoting to you are in fact accurate. Something else you may come across from some of these companies is also no money down deals. Now that's where they're trying to tell you that you can in fact get hold of an investment property without putting in any of your own capital. Before the credit crunch a few years ago, because of the way that mortgage lending worked back then, it was possible to do no money down deals. However, for the last few years, it has basically been an illegal buying process. So if anyone's offering you no money down deals, run for the hills. Also check whether the company has a vested interest in you being successful in the long term. If they're making all their money at the front end of the deal, so whether you're paying them just a fee for a lead or whether they get some sort of finder's fee when you complete on the property, then it doesn't matter to them whether you're successful in the long term. It doesn't matter to them whether it rents, and it doesn't matter whether at the end of the day its capital value is what they've told you it is. Some of the very best companies out there structure the deals with clients in such a way that they make most of their profit, you make profit, and those are the ones that you really should be aiming to work with. Finally, plan for your worst case scenario. Some of these deals are fantastic, they're good opportunities and they can be very profitable, but you also need to prepare yourself for what happens if ultimately the capital value of the property drops and it's not worth what you thought it was. What happens if you can't get the rent that you thought you could get? And what happens if you have void periods? Have you prepared for the financial implication of that on you? And lastly, do remember that when things go wrong with deals with property investment companies, 9 times out of 10, it's because people didn't do their due diligence before they entered into the deal. So check out the companies, check out the people behind them, look at the deals, go and visit these properties for yourself, have a look at the market and satisfy yourself that the figures you're being quoted really do make sense to you. And if you're in any doubt at all, you can always get in touch with us here at the Property TV channel and we'll help you do that.